Hey everybody, welcome back to Everyman Prepping. And today's video is going to be really short and we're going to focus on financial stories. We've done a lot of the geopolitical, some of the doom and gloom people call it stories lately, the news stories. Yes, there's more hostages released today, which is great, but I think we're coming down to the end of that with Israel basically saying we want the rest or we're starting the war back up. And they're committing to the fact that once they do get the hostages, they'll start the war. But I want to get away from that. I want to talk about some financial stories that are impacting us here at home in the United States, because we all know it's tough times for people. Inflation's high, rent's high, nothing's going down, food. So just a couple things I want to hit on to show the path the financial sector is going on, and so you can financially be ready for it. So let's start with that really quick. Also, thanks to everybody that's liking the video, sharing it, commenting it, and joining the channel, subscribing if you haven't done so far. What we see here, this came out Monday. 64 branches, bank branches are shutting down in a single week. It says, are you affected? Much less being affected because your favorite branch, closed and you got to drive further away. But banks don't close down when the economy is doing great, when it's roaring, when, this administration is saying we're doing great. Bidenomics is doing great. Everybody's doing good. Wages are up, everything, inflation's down. Well, if that was all true, you wouldn't have banks closing. And, they're blaming this here that there's more online banking than there used to be, so we don't need as many branches. Could be a little truth to that, but when the financial sector is going down, people are taking the money out of the bank because they need to pay the rent and their bills, and there's not many deposits, you close branches. And there's 64 of them closing down, and like I said, in a week. And I highlighted here, you can see a lot of them are in New York. In fact, a lot are on the East Coast, which I find kind of interesting. Not sure why or that, but it just seems like a lot of the East Coast branches are closing down. So, JP Morgan had 18 closing. A lot of them are in New York. Citizens Bank, 6 are in New York. Bank of America, 2 in New York. Like I said, a total of 64. I highlighted this because this is what it said. One major factor that led to the surge in bank closures is the rise of digital banking. I really don't believe that's the reason going through here, but that's what they pointed out, and I wanted to see what, write down below what you think your opinion is. Are you banking more online? And not using your branch? Do you not go in your branch ever? Do you need your branch? I know you have to fight to get your money out of the branch as it is now. You got to fight to get your own cash out. So maybe people aren't going there as often, just going straight for the ATM. Anyway, but watch for your bank closing down. A sign in your community that, the economy is not doing as great as they're telling you it is. It also leads to this here. It says, quote, small business lending and activity in the area declines when a bank branch closes. Most people use our alternative financing services that open them to unregulated and predatory financial practices. They're meaning instead of going to the bank to cash their check, they're going to a check cashing place with high fees, going to stores, whatever. They're not using their bank, which leads to problems. But that's the first story. Banks closing down, sign of bad economy, as we all know. This is also very interesting. So Black Friday just happened, and they said it was a record Black Friday purchases. But it was fueled by Buy Now, Pay Later. That's a new acronym they're coming out with now. BNPL, Buy Now, Pay Later. Basically, it's like using a credit card, but they're now on apps. And one of the ones that's come out recently is the one called Klarna. You've probably seen it on, stores are advertising it. It's all over the place. It's kind of come out of nowhere. They're trying to gain market share on, PayPal and Venmo and all those. But basically, it's like a credit card in your phone. And they do a soft credit check, and, they have 4 options. And, what they do for theirs, I'll go into that in a minute. Let's read what it says, and we'll talk about Klarna in a minute. But it said here, online sales on Black Friday reached $9.8 billion, marking an increase of about 7.5% compared to the previous year. The problem with that is that inflation's over 7.5%, so yeah, there's going to be more sales because they're not talking about profit. They're not doing inflation-adjusted numbers. Inflation went up, yeah, you're going to have more sales. Even if people, in fact, I truly believe that inflation is over 7.5%. So in my opinion, sales are down from last year. If you ask me, a lot of stores had no people in them. If you went shopping, did you see a lot of people out there? Some stores were bare, some not. But just because inflation is so high, you're going to have higher numbers. But that's what they're touting because they want to gaslight people, basically. All right, it says this trend indicates encouraging signs of consumer spending despite dismal sales forecasts. I don't think that's what it is. As we know, people are, buying stuff, but like I said, it's all on credit. So they're not using their money. These people that fund credit cards and apps like Klarna, the Sequoia Capital is the one behind that. And they're funding it all. Will they get their money back? Will they take a huge loss? I think they're in for huge losses. Anyway, last thing here. Data shows consumers were increasingly resorting to buy now, pay later options, which jumped 72% compared to the week before. No kidding, because people have no money. You've seen the videos online. People saying they can't pay the rent and buy food and pay bills. They gotta, spread them out, choose which one to go late, all that. But back to this Klarna, they got 4 options. So one of them is you can pay in 4 equal payments, no interest. Sounds great, right? You pay every 2 weeks, and if you pay it off, you're good. If you miss a payment, there's late fees and other stuff tacked on. There's a 30-day option. You can wait and pay for 30 days. And then there's the I need longer. I need over 30 days, up to 6 months. But then you should see his interest rates. They are like 7% to almost 40% they're going to charge you on this if you take their credit, basically. For the 4 payments that are no interest. So how are they making money, right? Klarna's not out there for free. Well, you know what they're doing? They're charging the merchants a fee. A normal credit card fee is around 2.9% or so, 2 to 3% is like what Visa, MasterCard charges the merchant for you to use it. Well, these guys charge 6%, so double the fee. A lot of merchants, like I said, it's all over. They're signing up for it. They're trying to get people to buy stuff. What they're going to do? It causes inflation. If they get double the fee, they're going to pass that along on everybody, buying everything, not just the people using the credit apps. So it's just going to cause more inflation. Do whatever you can not to buy on credit. Try to get rid of your debt. I know a lot of preppers think, well, if the world ends, then it's the end of the world as we know it. Why do I have to pay my bills? The debt's not going to go away if it's not a total collapse, grid down, total Mad Max, anything but that. Your debt's going to be out there, and they're still going to try to come for it. So try to get out of debt. Less stress for you. Turn your stuff into assets. But as we can see, the way the American people are, they're going into debt. And I figured a lot of these companies, credit card companies, these buy now, pay later app people, they're all going to be hurting. I think people are going to be skipping a lot of payments. People are just getting it now because to them it basically sounds like it's free. They don't care about paying it off later. So that's a bad trend if you ask me. Last story I want to go into here, the UAE says officially, this is from Crypto Politician or whatever that name of this website is, officially stops using the dollar for oil trades. Here you have a guy with plenty of dollars on the table. They're not short of money over there, that's for sure. But they're going to need to switch from using the dollar for they're not going to use the petrodollar. They're going to use local trade. It says the strategic pivot aligns with the broader ambitions of the BRICS economic alliance, of which the UAE is a recent addition. So if you remember, it was 5. They just added 6. Now it's up to 11. UAE is one of them. And like I said, BRICS is trying to kill the petrodollar, kill the US dollar, and that's what's going to happen. Down here I have highlighted, the UAE went in, then you got Saudi Arabia, Egypt, Ethiopia, Iran, and Argentina. So the new ones go in January 1st. Just another sign that your US dollar is becoming worth less. One day it'll probably be worth less. And, think about, not monetary advice, not a financial planner here. Got to say that for the YouTube police out there. But you might want to take whatever fiat money you have before your bank closes, go get it out of there, and maybe turn it into some kind of assets. And those of you that have bought precious metals, you're pretty happy lately. Let's check out silver. This is silver. You can see it's 25. You can see it's huge run up in the last few days. It's at $25 an ounce. Pretty good. I'd love to see it hit 30. It's doing great right now. So if you've bought silver in the past, you're probably pretty happy. Gold also is having a big run up. It's over 2,043. And so it's really doing great. It was holding back. That 2,000 mark was a big mark for it. So if you're a gold investor, you're happy as well. In fact, something that I've been following, the precious metal markets a little bit through my time here prepping, and gold has never closed the month above $2,000 an ounce. Never. At least that's what people are the gold bugs out there are saying on their posts and what I read. So tomorrow's the last day in November. And they're all looking for it to close above 2,000 because they think that's a sign of it going to 2,300, 2,500 an ounce. It'll carry silver with it, which would be great for everybody else out there that has silver. They always say that the silver is the money of the people, the gold is the money of the kings or whatever. But it's all God's money. It's good stuff. If you have the opportunity to invest in some, you might want to look at now before it gets up too high. But if you've done it in the past, you're looking good. Once again, that's all I have for you. Very short on the financials. Not looking great out there. Just, look for assets, get out of debt, and banks are proving that the financial collapse is coming. That's all I have for you. Until next time, keep your ear to the ground, head on a swivel.
If it bleeds, we can kill it.